Hey guys, what's going on? I want to talk to you about an important lesson today for today's daily vitamin, a trade that we took yesterday that frankly could have been like a $5,000, $10,000 trade, but ended up being like hundreds of dollars due to just some stupidity. We have a rule in boot camp, our trading boot camp. When we take a profit on a stock, we put our stop at the buy price if we're long, at our short price if we're short. But there's a caveat to it where if you put a stop at your short price, but it's right at essentially the add spot for another short, you need to move your short stop loss in a different position. So we took a trade in Crowd yesterday. Obviously, Crowd had bad earnings the previous day, and you can see the big trend on this thing, right? So we went green to red. So that's an actual setup, right? When the stock goes green to red, you can take a short right there. And, we took a little bit under, but right near 75 and got a decent kind of shred on it, like 73.45, not much, right? About $1.50, but in the morning, that's a good type of trade. So, I ended up taking off half my profits right at in the 73.50s. And then I put a stop at my buy price, which was 74.80. So what ends up happening is I have my stop loss at 74.80 because that's where I shorted it, because I want to minimize my risk, but I don't want to let this thing completely reverse. But what I also need to do is consult the charts, right? So we have rules, and the rules aren't steadfast. Like just because you short something doesn't mean you put it exactly at the short spot. When we're doing a class, we have kind of rules that try to fit like 99% of all people, right? Or 99% of all situations. But there are caveats and nuances to every single rule. That's why we do these daily vitamins. So when we do a short price, if the VWAP is at 74.56, the 9 EMA is at 74.94. So I'm putting my stop loss like right in the middle of these two. That doesn't make any sense, right? Because remember that your resistance points are just magnets. When a stock shreds down, it's just going to pop up into resistance and shred down, pop up into resistance, shred down, pop up into resistance. See that? How it just keeps popping into 9, popping into 20 later in the day. So me putting my stop loss right in the middle between the VWAP and 9 EMA is just going to be a magnet. And so what ends up happening is I just get stopped out on my last half, and then, right, next thing you know, this thing's at $71. That's thousands of dollars just right there in 15, 20 minutes, right? And so what I needed to do was put my stop loss right above this 9, give it a little bit of room. So if my average is 74.80, well, putting a stop loss at 75.01, I'm only losing 20 cents on that last half, right? So I take $1 something on the first half, and I lose 20 cents on the last half. If I got stopped out, I would still be up $1 on the trade. But, right, just because I was being mentally lazy, right, and just doing something automatic, like, I shorted, just put a stop at my buy price or short price, rather than actually looking at the chart and making my decision, right, can cost me tons of money. Now, on the other side of things, I should have definitely re-entered once it kind of remounted back under here, but then I felt like I was chasing and so on and so forth, but I had other entries to get it. But, I was just so annoyed with myself for stopping out like that it ends up being, I end up missing out on this huge trade, right? That could really be like thousands of dollars, and all because of what? I tried to save 20 cents. I tried to nickel and dime myself out of 20 cents. I was mentally lazy, strategically lazy by just putting my stop at the short price versus putting my stop where it needs to go. Now, sometimes if the resistance was at 76, then yeah, like I can't put my short stop at 76, right? Then I would just keep it at my buy price. But in this particular case, because the areas are converging, give it the extra leeway. If you have really tight stops, you will get stopped out all the time. You will think the market is choppy, and you'll just get shaken out. Like, anybody ever trade like that where you're like, oh my God, I'm getting shaken out all the time? That's because your stops are too tight. So there is a small nuance on how to do these things. Hopefully that helps, guys. See you all in the chat room in a few.